Hello Market Club members everywhere. Adam Hewson here, coming to you from the digital studios of Market Club. Well, it is Wednesday, the 19th of October. It's debate night. Yeah, I know we're all sort of tired of this politics stuff, but tonight's the final debate, and I'm sure it's going to be watched by millions of people. But we're going to be talking about Netflix and Netflix's big move yesterday. Now, if you're following our trade triangles, you would have caught the move. And I'll show you how you would have caught that move. So let's just take a look at the stock of Netflix. Here it's daily chart, Netflix, NFLX is the symbol. And you can see it sort of meandered along here, and all of a sudden we had a green trade triangle. That turned the signal around, indicating that the trend had now turned back up, and you should be long this stock. Now notice when I put the weekly in, there's no weekly to get out right now. So basically the monthly kicked in, changed the trend, you get long right there at 101.27, and bingo, yesterday we closed at 118.95. The high yesterday was actually 119.82, so it's closed very close to its high. Good close in Netflix. It looks like this stock can move higher up to the 133, 135 level. Would not be surprised to see Netflix make new all-time highs. It's building a subscriber base. It's just doing a lot of things right, and it's a great service. So watch Netflix very carefully. Now here's the gold market, the December contract. You can see what we're looking at. Here's the monthly. All the trend is down except for the daily, which indicated yesterday you should be out of this market. We would have been short this market, and you would have been short from this level right here, 1,336. You would have covered that position at 1,260 for a very, very nice profit, and you'd be on the sidelines right now. You pay more attention not to the monthly here, but to the weekly, and that's the key thing to look at. So you're looking at the weekly, which gave a signal that you should be short this market quite some time ago. And let's scope this just out a little bit, and you'll see. There's the weekly that kicked in on August 24th, indicating that the trend was down. And you can see how it just sort of went sideways and boom, went down. But now, with the daily in there, you should be out of this position and on the sidelines. We've turned up on the RSI. A little bit of a divergence, not dramatic, but a little bit of a divergence. What's the 50 line? That should be resistance in this market. The trend in crude oil continues to be positive. We do have resistance coming in right here. This is going to be obviously a very big area for it to overcome around the 53.5 level. 53 to 53.5 should be resistance. You can see also we've got resistance at the 52 level where we stopped before. So again, but the trend is higher, and the trade triangles are all positive, which is something we don't go against. So follow that market very carefully. You can see the last signal kicked in right here at 48.90. It's 51.35. That's another nice profit in there. That's approximately $2,500 profit per contract. So that's looking very good for us. Let's look at the indices right now and see what they're doing. Well, as you can see, our indices are still moving sideways, really no trend. Watch the 50 line, that's still resistance, still chopping around there, but it really hasn't. The one thing that's interesting, and the only thing I can sort of say about the indices right now, is that you have this effect. So look at how prices were lower. You see the trend, there's a low here, then the little lower low here, and look at how the momentum handle that. So you actually went up. So that's a little bit of a divergence. Watch the 50 line. If we close over there, that may be an indication that we've actually come out of the worst of this. The other thing to look at, of course, is our trade triangles, and this is the one to watch, the weekly. If that turns green, it would have to probably go over 2,180 right now to turn green, so it's got quite a bit of work to do. Then I would want to be long the indices. But for now, the best place to be is on the sidelines. That's the key level. That's a position in and of itself. That's a cash position. So stay on the sidelines until a trend is really developed in this index. Very similar position in the Dow. You just sort of go sideways, sideways, sideways. Divergence, yes, we've got the divergence, but really the longer term trend in the Dow is still positive, but we need the timing mechanism, the weekly, and we don't have that right now. So best to be on the sidelines here. Here's the NASDAQ. You can see, again, this is actually doing a little bit better. We did have a divergence on the other end in terms of it being a negative divergence. You can see how prices sort of moved higher, like here. We talked about this earlier in the week, and then the momentum went the other way. So again, choppy action, really no strong trends, mixed trends again. The weekly is red, indicating a sidelines position in this market. One thing I want to share with you is Amazon. Let's take a look at that right now really quickly. Look at how Amazon came down right to the 50 support line and bounced. This should be good support for Amazon right now. All the trends are higher for Amazon. You can see it from $657 on a monthly when that first kicked in. And that was way back here in April. And then a weekly kicked in at $728 again. And that was really back here in the July period. So again, very strong, very bullish on Amazon. Doing a lot of things right. Jeff Bezos is the new man in the internet space, and he's done a lot of things very, very well. So he deserves a lot of credit. Hey, I'm Adam Hewison. Thanks for stopping by. Don't forget to watch tonight's debate. It should be interesting to say the least. Thanks for watching and for being our customer. We appreciate your business. Have a great trading day, everyone.